Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. And we're starting with EURUSD as usual. Let's discuss the trading plan with Miroslav Bawulski. The short drop in Germany GfK Consumer Climate Index had only a minimal impact on the euro, and the pair continued to move higher. It is clear that traders are largely ignoring weak signals with the Eurozone economy, as well as the fact that the US Air Force is significantly increasing its presence in the Middle East, a move that could lead to a further escalation with Iran in the near term. With no US data scheduled for the second half of the day, market conditions remain thin, so caution is the key. If EURUSD moved lower, only a false breakout around the support level of 1.1729 will provide a long entry targeting a recovery towards 1762. A break and retest of these levels from above would confirm the entry and open the way towards 1791, signaling a return of bullish momentum. The final upside target stands at 1.1822, where you would take profit. If the pair continues to decline and shows no activity around 1729, downside pressure will return, pushing EURUSD towards 1703. Only a false breakout there would justify long positions. Alternatively, you could consider buying on a rebound from 1673, targeting an intraday move of 30-35 pips. Sellers have yet to show any real presence, which is quite surprising given the current global backdrop. If the euro continues to rise, bears will need to defend the 1.1762. A false breakout there would provide a sure entry, targeting a move down to 1729. A breakout and consolidation below this level would open the way for further decline towards 1703. Where the moving averages support the bulls. We expect more active buying interest around this area. The final downside target stands at 1673, where you would take profit. If EURUSD continues to move higher and the bears remain inactive around 1762, buyers may push the stronger move early in the week, opening the path towards 1791. You would only consider selling there after a failed breakout. Alternatively, you could plan to open short positions on a rebound from 1822, targeting a 35 pip downward correction. Let's trade with the MACD indicator. It's time for GBPUSD. Jakub Novak presents. You could buy at about the pound today upon reaching the entry point around 35.72, targeting a move to 35.97. Around 35.97, you could plan to exit long positions and open shorts in the opposite direction, expecting a 30-35 point move. Further pound gains today can be expected only if there is positive news from the Middle East. Before buying, make sure that the MACD indicator is above the zero mark and just starting to rise from it. You could also plan to buy the pound today if there are two consecutive price tests of 1.3547, while the MACD indicator is in an oversold zone. This will limit the pair's downward potential and trigger an upward reversal A move toward 35.72 and 35.97 can be expected. You could plan to sell the pound today after a break below 35.47, which could lead to a rapid decline in the pair. The key target for sellers will be 35.16, where you could intend to exit short positions and immediately open longs in the opposite direction, expecting a 20-25-point move. Pressure on the pound will return today if the US and Iran take a hardline stance. Before selling, make sure that the MACD indicator is below the zero mark. And just starting to decline from it. You could also plan to sell the pound today if there are two consecutive price tests of 35.72, while the MACD indicator is in the overbought zone. This will limit the pair's upward potential and lead to a downward reversal. A decline toward 1.3547 and 35.16 can be expected. That's all for today. See you online soon.